Well, hello everybody, and thank you for tuning in. This is another market update for you. Looking back to May, I wanted to go over a few things quickly, and then I'm going to go over something broader. Now, I normally keep these down to like a minute to 2 minutes max. This one might run a little bit longer, but I think it's very important that you stick around till the end because there is something in talking about the general market that I think is really important for everybody to understand. So quickly going over the stats from last last month. I just wanted to show a few things that I think are quite important. As I mentioned, the housing price index, this is going to be a bit skewed, and I don't know how they do this, but the housing price index shows prices are skyrocketing in Squamish. And yet, if you look at the sales price of individual property types, you'll see that the detached properties has gone down, apartments has gone down, and townhouses have gone up. There's been a lot of multiple offers happening in townhouses up until about 2 weeks ago. And that's driven the townhouse prices up. That shouldn't have driven all of the prices up, but that's what it's showing. So if you're seeing people talk about the average price in Squamish is going up, it's actually only going up in a few of the townhouse segments. And because we have so few sales per month, it appears to be reflective in the overall market. Now here's some interesting ones. Percentage of average or asking price. So it's gone down from 110%, which means we were getting a lot of offers above, down to 102%, which means we're getting offers at and below the asking price. Now, over the last month, what we were seeing is we were no longer getting 8 to 10 offers on a single property. We were starting to get 2 and 3 and sometimes only one offer on a property, and that's why that ratio has dropped quite dramatically. I'm going to explain a little bit more of that later. And in fact, actually I'll mention it now. Client asked me to go through. I pulled up the last 25 sales. Of the last 25 sales, only 5 of them had gone over the asking price at the time of pulling that information, as opposed to about 80% of them, like 20 out of 25, were selling above the asking price. Now the ones that are selling above the asking price are selling, a few $1,000s above the asking price, but not substantially higher than they were before. So that's kind of important. You can see here the days on market is just starting to creep up, and I think you're going to see that settle in next month, probably around about 10 or 15 days as opposed to the 7. It'll double, and we'll get back up to where we were in September. We'll probably be up there within a couple of months. So that's going to happen as well. Total inventory, this is a good sign to see, and you're going to see with the new listings are at an all-time high for the last 3 years, and total inventory is starting to climb back into a normal zone. So that's creating a more balanced market for us, which is really important. Number of sales is kind of tapering off a little bit, and I think you'll see that into the summer. As I mentioned in a previous post, we brought all the buyers forward that were going to be buying normally. And they've all been brought forward into the end of 2020 into the beginning of 2021. So you should see that number fall off for the number of sales that are completed. Sales to active ratio, this is huge, going all the way from 2.43 down to 0.7, which means we're now at a point where there's going to be more properties getting listed than there is being sold. That's a super important concept for seeing the market balance out a little bit more, and even starting to come down in the volume of sales. I think price will sort of remain the same. So just to give you sort of a clarity here, when we look at our listings, so if I go back 20 days, for example, there were 53 new listings over the last 20 days, but 59 sales. So going back 20 days, the number of sales was outpacing the number of listings. Now, if I only go back 10 days, and I apologize for speaking quickly, but you'll see that the new sales are still outpacing it by 3. And then if we go back to 5 days, the new listings are actually outpacing the new sales. And now if I go back just a couple, we're still outpacing 3-to-1 on the last 3 days for new listings to new sales. You also notice there's some price changes starting to happen. So people dropping their prices in order to try to get some offers on their property. So that's where we're at as far as that portion of the market goes. What I wanted to talk to you about is on the broader macroeconomic scale. What we're looking at is there's starting to be some concern about inflation, and many of us know prices in stores have gone up, prices of gas has gone up, the food that we're buying has gone up. We are definitely rampant with inflation. We're getting into towards the 5% level for inflation. And if you remember correctly, I mentioned before, the government said they wouldn't increase the interest rate unless the inflation rate came up higher than 3. Well, we're already jumping up to 5. The government will not be quick to raise the interest rate. However, it probably will happen at some time. And this is where I wanted to speak to everybody about. There's a lot more factors to it than this, but this is something that's really important. What has happened is, as I've mentioned before, the government wants to prop up the housing prices. However, the dropping of the interest rate is causing people to over leverage themselves in this market. Now, why that can become a problem is if, and this is a big if, and this could happen in 2 years, 5 years, 10 years, if the interest rates start to spike up and people can't afford to pay their mortgages, they will be foreclosed on. So I'm just going to encourage everybody that if you've taken out a large mortgage, is maybe say, can I afford this if I have to pay $200 extra for every $100,000 of mortgage I have? For example, if you have a $500,000 mortgage, you have to ask yourself, can I afford to pay $1,000 a month for 2 years just to hold on to my mortgage if the interest rates cap out an extra 2, 3, 4% over the next couple of years? Now, it won't affect you right away, but it will affect you when it comes time to renegotiate your mortgage, and you need to be able to afford to do that. That's a real critical standpoint, because if we get some exponential rise in real estate in interest rates, which we have had in the past, it's happened once before, interest rates shot up of 24%. I don't suspect that would happen because the government's in much better control of managing the monetary policy. However, if something like that did, if there was some absolute massive rush on interest rates, then it could put you in a real financial predicament. So we just want everybody to be aware of that. When you're looking at property, try not to overextend yourself. If you currently own, do your best to pay down your mortgage as quickly as you can. I think right now that's the prudent things to do. That's where we should be looking and focusing our energies on, so nobody gets to the point where they can't afford what they currently own. That was my little bit rant, but I really felt it was important to say. I've been doing a lot of macroeconomic research as far as just the global economy goes, and there's a lot more to that. If anybody ever wants to talk to me at any time about that and how it could potentially impact you down the road, because there are going to be some substantial impacts coming. A lot of people probably have money invested in RRSPs. They probably have money invested in the market. The interest rate is going to have a massive, massive impact on where your money is placed. For example, if interest rates or inflation, it goes rampant, you want to have your money in hard assets like gold and cryptocurrency and things like this. And this is not investment advice. I'm not telling you where to put your money, but I'm saying these are the things you need to ask your investment counsel about and say, hey, if inflation runs rampant, what are you going to do with my money? Because if they put it into the wrong avenue, it can be a problem. If the interest rates go up, then you're going to have growth stocks will have a little bit of a challenge or a little bit of headwind because they're typically highly leveraged, and the cost of borrowing depends on how much research and development they do. So you kind of got to play all those things when you're looking at it. And how do those impact housing prices? Well, if people don't have money because their investments are going down, they can't buy houses. So keep all that in mind. If you ever want to speak to me about it, I am more than happy to speak with you anytime. I hope you're doing well. Hope we get a real summer coming along soon, not January like we've had. And I'll look forward to speaking to you in the future. Have a wonderful day and all the best for the start of the summer. Bye for now.